Good afternoon. If you could take your seats, we'll get started in this panel on international trade. Really quite unusually, international trade was a significant issue in the US elections last year. It really hasn't always been the case. And of course, both Secretary Clinton and President Trump were highly critical of trade deals. And since taking office, President Trump has basically jettisoned the US involvement in the Trans-Pacific Trade Agreement, been highly critical of NAFTA, sometimes characterizing it as a bad deal for America that needs to be terminated, and more recently has suggested that it needs to be modernized or updated, renegotiated to better serve the United States. So trade has been at the forefront of public debate over the last year. And trade law and policy frameworks, I think, have introduced some important building blocks, frameworks around the digital economy, but fairly modest rules, I think it's fair to say. We know that the WTO has had a moratorium on taxing e-commerce, and that the rule framework itself has some provisions with respect to services, but those don't explicitly cover data flows. We've had a few dispute settlement cases that have raised questions about China audiovisual distribution issues, a services gambling case, and some others. And the first real rule-based framework that was advanced was in the TPP that included some binding language on data flows, but it also included some important exceptions, which I think included finance being one of those. We've seen, obviously, a transatlantic negotiation started, but now stalled under the current president. We've seen a TISA agreement. So we have these frameworks that were starting to take some shape and definition. But we've also seen a lot more talk about digital sovereignty. So I think this conversation occurs against a bit of that backdrop, and we have an extraordinary group of individuals to talk about these and other issues, and I'll just very briefly introduce them. Usman Ahmed is the head of global public policy at PayPal, and he covers really global issues on financial services, regulation, innovation, trade, and entrepreneurship. He's also an adjunct professor at Georgetown Law School, where he teaches some really cutting-edge courses on the digital economy and finance. Ricardo Melendez-Ortiz is the co-founding chief executive of the International Center for Trade and Sustainable Development. And perhaps for today's discussion, important to mention that he's been the co-convener of something called the E15 Initiative, which is an ICTSD World Economic Forum collaboration that has brought about 400 experts together to identify some really fresh thinking on the future of the international trading and investment system, including around digital trade. Victoria Espinel is the president and CEO of the Business Software Alliance. She is herself a respected authority on the intersection of technology, innovation, markets, and policy. And this is an organization that focuses on those questions involving more than 60 countries and 10 global offices. She previously served for a decade in the White House for both Republican and Democratic administrations, and was President Obama's first advisor on intellectual property, and before that was at USTR working on innovation and intellectual property. Professor Anupan Chander is director of the California International Law Center and is the Martin Luther King Jr. Professor of Law at the University of California, Davis. A graduate of Harvard College and Yale Law School, he has been a visiting professor at Yale, Chicago, Stanford, Cornell. I hope to add Columbia in the future. He's the author of The Electronic Silk Road, which is a terrific book that came out last year from Yale Press. He's published widely, and I'll reference some of his work later. Malcolm Lee is the managing director and head of policy at the Alibaba Group. He has a long and distinguished record in government, and he was also the non-resident senior fellow in the John Thornton China Center at the Brookings Institution. He served in the White House as the senior director for intellectual property enforcement and coordination, and at the Commerce Department as counselor to the secretary and head of policy and strategic planning. So I think we're going to try and have a conversation rather than some initial intervention. That's our modus operandi for the day. And I think, again, to help orient us, as we think about the intersection of information flows and the importance of the digital economy, I'd like to ask a few of our experts here to help us think about the significance of this and where you see trends developing. Let me invite Usman to get us started.
Thank you. Thank you for organizing this conference and inviting me. It's really rare that you bring together this kind of group of cross-sectoral experts from technologists to industry, and so it's really an honor to be here. So we wrote this framing paper on what's going on in the digital economy and trade. And I want to simplify 5 or 6 pages into a couple of very concrete points. One is the notion that we heard in the beginning of the day that there's kind of this dogmatic discussion about the internet as being this great thing, and you know, where's the data to back that up? And so what we've done in the framing paper, or in the paper for you here, is said the distinction about the internet and trade is maybe not pure efficiency, which was discussed at the beginning of the day, but rather the idea of an inclusive economy, which has always been a big problem, arguably, with trade, is that the winners of trade were the big guys and the people who could take advantage of international markets, create trust across borders. And so what the internet has enabled to happen is the idea of smaller entities being able to compete globally. And so we did this study where we looked at businesses using PayPal, and in particular, the most interesting finding was when we looked at businesses in the US in the middle of the country, or in rural towns with 50,000 people or less, we found that they had the exact same growth patterns and exact same export patterns as those on the coasts and in large cities like Manhattan, which I would challenge anybody to look at a telecom network or to look at another proprietary network and say, oh, that same thing would play out in that dynamic. I just don't think it's possible. And I think that's the fundamental distinction about the internet when it comes to trade, is this idea of democratization, this idea of businesses anywhere, and we'll hear from Alibaba, you know, can compete globally and can offer a service on a competitive basis. So that's the most exciting trend from my perspective, and the most interesting thing, and why the issues around fragmentation in the trade space are so interesting, is because they affect such a unique part of the economy that has never been participating in trade before.
Thank you. Victoria, would you care to add to that?
Yeah, so I would agree with that, and that's something that you know, we talked about quite a bit at USTR and when I was at the White House. I mean, the internet is this great leveler in terms of global competition, and so it gives people at all sorts of levels of economic status and in all sorts of different markets the ability to access and compete in markets in a way that would have been not just difficult, but absolutely impossible before the internet. So the internet has had a massive positive impact on trade. And then the flip of that, I think, to think about is, so what are the trade rules doing to try to promote that? And I think we're in a situation today where they are, you know, they are at best vague, and I think there's some places where there are pretty massive holes in the trading system. And that's hopefully one of the things that we can get fixed, and I assume we'll talk a little bit about that today. But I think you've seen the internet have a big impact on trade, and I think now is the time to figure out, is there a way to create a trade rules or a trade agenda that are going to equally sort of give back and promote the internet?
Mm-hmm. Malcolm, you know, obviously Alibaba is just grown so incredibly and has become a major global platform for small and medium-sized business. So you have a unique perspective on how commerce is growing through digital exchange. Could you offer some sense of the scale of what we're seeing globally?
Sure. Our experience has been heavily in China. I worked for another company, Microsoft, 4 years in Beijing, starting in 2006. And I remember even before that, our chief technology officer, Craig Monday, would speak in India and China and elsewhere. And he'd take out his mobile phone and he'd say, this thing is going to be more powerful than the computer on your desk. And this is going to allow you to leapfrog the United States, Europe, all of us with legacy systems. And I would hear that and I'd say, boy, that sounds really good. And I moved to China in 2006 with Microsoft. I had a bank account with a large bank. I couldn't use a credit card. I couldn't write a check on my account. I had to carry cash everywhere to pay my kids' tuitions, to pay my monthly rent. The infrastructure wasn't there, and when my team would come back to Redmond, they would disappear for a day. And I said, "Where'd you go?" I said, "Oh, we went to the outlet malls." I said, "What'd you do there?" Well, we were buying clothes. I said, "Well, all that clothes are made in China." And they said, "Well, yeah, but you live there. You can't get those clothes in China. The retail infrastructure isn't there." I said, "Then where'd you go?" And they said, "Well, we went to GNC." I said, "GNC? Well, why GNC?" He said, "Well, you can't trust the vitamins." So what Jack Ma and Alibaba saw was this incredible market failure, that the consumers' needs were not being met, and built a payment system and an e-commerce system that have served now. We have over 460 million active mobile users. 90% are mobile buyers. And it's filled a gap at a rate. It's a 16-year-old company, but it's really only the last 10 years that this has really taken off. And it's taken off at such a pace that it is driving, is a major driver in the shift, economic model shift of growth in the Chinese market, away from, towards consumption rather than heavy investment, heavy industry, export growth, to many more imports driven by consumption, and creating a service economy around the entire ecosystem of e-commerce, which is payments, which is logistics. And this is, we think we've created about 30 million part-time jobs, job opportunities, and about 10 million hard jobs. And so we've seen it happen in China, the ability to move so fast and to have such an impact. And as Usman says, it's empowering the little guy. It's empowering, it's connecting the small business into value chains, into initially domestic e-commerce, and then moving globally. There are 40 million micro and small and medium-sized businesses in China, and 1/8 of them, about 5 million, engage in importing and exporting, but they generate 60% of China's total import and export volume. And so we saw this and we said, well, boy, this is incredible. Let's move out of China. Let's try to expand globally. What do we want to do? Why are we here? We're here in the U.S. and in Europe and elsewhere because these countries make the things that the Chinese, those 400 plus million, 300 plus million middle class Chinese consumers want. And we're able, and in India, we're partnering with Paytm. In a year, we have moved to almost 200 million mobile payment users. It's an incredible pace of change. And so, last week I was in Geneva with Jack. Jack is a special advisor to Secretary General Katui. And when he initially, wanted to do this, we think about UNCTAD. Most of the companies here spend a lot of time, down the hill from UNCTAD at the WTO. He is there because he believes so strongly. We believe so strongly in the power of the internet as an equalizer, the power of the internet to help small and medium-sized business, to help young entrepreneurs, female entrepreneurs, give others handicapped and disabled the access to the internet, and to finance small business through microloans. So it's a great story of development. It's a great story for equalization, and I think when we talk about fragmentation, fragmentation is we are fragmented not only digitally, we are fragmented politically, and it's really important that we not forget what it is that we're trying to accomplish, and what the internet can enable, because that is what is going to allow us to update the very complex and obsolete rules that are hindering the ability of small business to use the internet and our platforms to engage in much more inclusive trade.
Okay, thank you. Anupan has done a tremendous amount of work on data localization and data rules around the country. And you heard earlier discussion today alluding, what is your assessment about the kinds of measures that have been introduced within countries that affect digital trade that we should care about, and why? I mean, if it's a nuisance factor and it raises some cost to business, then business will care about that, but it's not as much of a societal concern. If it has a fundamental impact on innovation, then you worry about it. But what affects innovation is hotly debated. So help us think about what are the barriers that exist or being introduced around the digital trade and commerce world that is expanding that really matter.
So let me return to a comment that Eric Schmidt made earlier this morning, which was that the lifting of 2 billion people out of extreme poverty has been a tremendous boon for the world, and even also just for the United States. And I think that's been a key feature, key result of globalization and trade. That is, trade has really enhanced the opportunities that people have across the world to jump the fragmentation that national borders create, right? So trade has made it possible for people across the world to share, products with each other, and in the new world of the internet has allowed for people to share services with each other. That is, now you can provide services from Indonesia or Africa to richer parts of the world. And fragmentation in the existing world really exists largely in the terms of visas, right? Visas are the most onerous parts of fragmentation that actually exist in the world. That is, the hardest thing to get across a border is actually not a good, not a bit, but actually people. And so what we need to do is focus on the ways that we can liberate those kinds of borders, but the internet is, of course, a way to jump those borders, to jump that fragmentation, and trade is supercharged by the internet. So I think data localization in this context turns out to be reimposing that kind of political fragmentation on the internet. And so it disrupts those potential benefits of e-commerce, of service provisions across borders. So essentially it takes people out of a global space by imposing these kinds of borders that keep people out.
Well, let me give you the hypothetical. I'd like to ask Victoria to comment on this as well. If you have a plane flying across, or a car driving across boundaries, and you're moving towards autonomous, semi-autonomous, and data flow is really essential to the learning of those industrial enterprises, and you have barriers on the flow of that information. Is that a serious problem, or is that something that you can correct for through other means so that we should really care about it? Victoria?
No, it's an absolutely serious problem, and I think, so you talked about the fact that fragmentation caused business uncertainty and all of that, and that's a negative, but just to put that aside for a moment, I think you have a great question. So why should society care about this, and what are the bigger impacts? And I would list at least two. So one, I think in terms of stopping innovation, things like big data analytics and AI and cloud computing cannot work unless data can move around the world fairly easily. So without that, those innovations are going to stop. And I think, for many of us who are kind of immersed in the technology world, we take all of that, we take it for granted that that's on a positive trajectory, and I think you can lose track of the fact that cloud is actually a very new technology. And AI and the data revolution have barely just started. And I think if there is a cloud put over those new technologies, essentially at their inception, it's going to make it much more difficult for them to move forward, and that is going to have a negative impact on society. Beyond that, which I think is in itself a major problem, we see fragmentation policies being used to justify or to maintain political policies that we would disagree with. So censorship is a great example of that, and some of the countries that are pushing back on free flow of data are doing it because they want to have censorship policies for their own political reasons, and that has obvious negative societal benefits that I don't need to elaborate on here. But I think both on the innovation side and then on the sort of political system side, there are real ramifications for fragmentation that go far beyond business uncertainty and unpredictability.
Mm-hmm. Well, let's turn to the policy frameworks that one could imagine us getting back to, either bilaterally, even if TPP doesn't go forward. Japan is thinking about going forward. Provisions from it might be imported into other specialized agreements. You may see new initiatives started, or maybe not. And of course, we've seen some US-EU initiatives around information sharing in the wake of the ECJ ruling. That might produce next generation agreements, who knows? And one would think that perhaps one needs more frameworks, bilaterally, multilaterally, et cetera. I know that Ricardo Melendez has been thinking a lot about how we might revitalize some of the trade talks and where the work needs to be done. What is your assessment in the current environment, which is far more skeptical than it was a year ago?
Thank you, Merit. It is a great question because, and as you say, because the current environment is different from what it was a year ago and what it was a few years ago and so on. And that's one of the characteristics of the digital economy. So when the WTO came into being in the 90s, already 20 years ago, in 98 or so, it set up a working group to look into these issues, to look into how to tackle what it called electronic commerce under the WTO. It is still, 20 years later, it's still trying to debate what really is it that the WTO should do and why about the digital economy. And it hasn't moved much. Part of it is what Professor Nye mentioned this morning, bringing everybody to the party and then making sure, or rather he said bringing everybody to the act and then making sure that there's action. So you have a set of governments there that have a very heterogeneous interaction with the digital economy and have had through the years. At the same time, all this has evolved at an incredible pace, and they have not been able really to catch up. But beyond trying to excuse them, I also think that we all are pretty confused about exactly what is it that we want and who to regulate these kind of issues and what issues to regulate. So I'm with Victoria and I'm with the opinions that have been expressed here, that what we need, if we start with inclusion, as Usman said, so a digital economy that really serves the quest for inclusion in the global economy, what we need is interoperability, trust, scalability, openness, and so on. But the question is, if we have been able to go as fast and as far as we have been without any of those rules, are we clear about what are the fragmentation or the fragmenting pressures that we're feeling in that digital space, and then where to put really the energy of generating some frameworks, particularly on trade and investment, to deal with them. And my perception is that, as you said, in the past, just in the past 3 years that we've been looking at this, we have seen incredible shifts, including from big corporate actors and others, also from specific governments, as they approach these issues. How do we separate bits that travel as part of a commercial transaction from bits that are shared between people just because they're friends or family, right? And how do we go about treating them differently? When it comes to issues of privacy, for instance, when is privacy used in ways that it's beyond really protecting the user, and rather with some sort of commercial protectionist agenda, and who gets to discern this? Those sort of things. That's one part of I think why we haven't moved much is because the issues are incredibly hard, and we've been deliberating them. Countries have been talking about them. They don't do this at UNCTAD, they do it at the WTO. They take time. It's very hard outside, off campus. Many of us take a lot of time with many of these issues. The other part of the explanation is that in the current frameworks, as you also said it, we have an agreement on services that could arguably cover a great deal of the concerns that many people have with respect to fragmentation, including providing the safe harbors for privacy, for instance, and for other issues that would be necessary, well, safety and security and so on. And so that services framework has been tried a few times in the past. It has helped in resolving some of the issues. It has helped, I think, in the right direction, basically maintaining the openness of the system for commercial purposes. But is it enough as we get into also an understanding of the digital economy that goes beyond the commercial transaction of services and goods through the internet? And I think, again, the question you asked before about the plane traveling puts things very much in the right context of today.
Well, I think everyone here has a view on this question, so I'd like to just get everyone's thoughts. Anupan.
So it's unclear whether or not there's an easy way forward in this space, as Ricardo's mentioned. There's a terrible amount of disagreement across the world. And just take the headlines of this week. So Twitter Turkey has banned Wikipedia in that country. Twitter has been banned from time to time as well. Russia has apparently put WeChat on a list of banned sites this week. And so Tencent is discussing this with the Russian authorities. But at the same time, you also have kind of really interesting moves that go the other way, which is SpaceX announcing its plans to deliver internet globally. And this will make it harder to fragment or control the internet locally, potentially at least. And so, and other similar companies vying in this space. So there's a lot of kind of complication and uncertainty in this space. There are forces pushing and pulling in both directions. Eric Schmidt mentioned the difficulties that Google is having in France with respect to the demand of the French authorities to apply the right to be forgotten across the world. That is, France says if you are going to remove something, it should be removed so that it's not visible to anyone across the world. And Google, I think rightly, says this is an excess of, this exceeds French authority. And so these kinds of fragmentation and counter-fragmentation questions are going to be very complicated. I think there are global frameworks that are trying to address these things. The international trade law actually has a lot to say about keeping stuff moving across borders while still protecting rights and consumers as they are part of this global enterprise. But I think we're going to need to be watchful about fragmentation that's unnecessary, that doesn't actually serve to protect individuals, but rather serves to protect local incumbents.
So I think it's interesting that you started this discussion with the macro beyond the internet itself, but there's this macro concern about trade around the world. And a lot of it, I think you were alluding to, is a little bit of a lack of understanding about what trade is, what is actually going on with trade. And I think that could be playing out in this space as well. So I talk about in the paper this notion that trade is a tool amongst many other tools in the toolbox around fragmentation. And the tool of trade is very focused, actually. It's actually only about one thing, which is governments treating foreign actors differently than they treat their domestic actors. At its core, that is what trade policy is about. And so the only thing that trade policy will do with internet-related things is when it touches on that. So in the examples you raised, if Turkey is treating all Twitter-like services that are Turkish the same as they treat Twitter, trade policy is probably not going to say anything about that, right? And secondly, to your point, trade policy has these exceptions for national security and privacy. And there actually was this case you alluded to, Dean Janow, in the US on a trade case that related to the internet. There was a small island nation, Antigua, that was providing an internet-based gambling service to the US. And it got blocked. Very much almost like a fragmentation issue, right? And the WTO, the court at the World Trade Organization, said, that's fine if the US says it's for public morality, which is an exception. But the US wasn't able to stand on that because the US allowed gambling in the US by US providers. That's where trade policy is going to play a role on fragmentation. And I think that's a tool. I think the work of the multi-stakeholder community is going to be a tool. I think these are all interlaced tools that have functionality. And I just wanted to lay that out in a room of folks who probably aren't trade experts as to kind of where trade plays into this fragmentation debate.
Yeah, thank you. Very, very important. I think, let me just also say on that gambling case, it was a question of, did the United States schedule openness? And so that's also how the trade regime speaks to the question of services, is what does the country commit to as against some automatic right that is externalized. Malcolm, what is your sense of this?
Yeah, I'll approach it going back. We talk about data location, data mobility, but I think it's important we come back to what is that data being used for, and I'll just use I'll just use one example. It's our Ant Financial has been able to, through its knowledge of the small businesses, has been able to give $1 billion to 400 million small business users, average $3,000 to $5,000 microloans with an extremely low non-performing repayment rate. But it's all based on data. It's all based on our knowledge to be able to assess the risk. And so when, Alibaba has all the companies represented here, and we all comply with local laws as we must. But when you make it more difficult to use that data, you're also potentially denying a service to those who are least included and who are being left behind in the economy. So I think we need to remember, we need to keep that in mind. I think, policymakers and all of us need to keep that in mind. What are the services that are being potentially put at risk when restrictive policies are in place? I mean, there are countries are going to have different approaches on these issues, and nobody wants to. No government will ever want to define national security, but there are interoperability frameworks that are being developed, often with the leadership of industries from companies from many different countries. There's some great work being done with the APEC privacy framework and others that are potentially provide some path forward.
Mm-hmm. Victoria, how do you see at this moment the software industry as an advocacy group on the establishment of rule frameworks? What are the top priorities?
So I would be delighted to talk about the software industry's top priorities, but let me go back to the sort of bigger question here, and then of course happy to talk about our own individual priorities, because I think. And it's great to go last and kind of hear what people have said. I feel like we have three challenges, ultimately, in terms of what we'll call digital trade. One is that it's really hard and complicated, which is a point that's been made. And I think it's hard and complicated for at least a couple of reasons. One is, this is new. It's new technology still. The rules don't exist. And anything that is new is, by definition, going to be hard to do. The other thing I think that makes it so hard is the ramifications of this are enormous. Yes, non-discrimination is the core of the trade rules, but you can also make substantive rules in trade policy. And when you do that here, it has consequences for the economy as a whole. I think the whole digital economy, how much of the economy is digital, at this point is becoming a completely false distinction. So we're talking about a set of rules that are going to have ripple impacts across the entire economy, and that makes it very, very complicated. So first challenge is it's really hard. I think the second challenge is the economic motivations of all nations are not aligned. And I think some nations view technology and digital trade as their future, and I think others don't. I think that's short-sighted. I think that's going to change. I think that challenge will eventually disappear, but it will take some time for that to disappear, and we are living in the here and now. And I think the third big challenge we have is that many of the traditional mechanisms that we've used to address these issues are feeling like they're not the right place to have these discussions right now. And it's really hard to make progress. So it's really complicated. Countries have there's a wide variety of views, and there's no obvious mechanism to have these discussions in a productive way. And so I think the question is, as someone who cares a great deal about this issue, where do you move forward? And my own view, and I'm sure that people that will disagree with this, is I think you look to the reality of what is presented to you and you make the best of it. And I think at this moment, that is bilateral and regional conversations that are having among governments. So potentially NAFTA is going to be updated. NAFTA was negotiated over 2 decades ago before the commercial internet. It, by no fault of its own, does not provide rules here. That's an opportunity. The Europeans and the Japanese are in the middle of a free trade agreement negotiation. That's an opportunity, and I would urge the Japanese government to stay strong in those discussions. The US and the European member states and European Commission are going to have the opportunity for bilateral discussions. I think you look to bilateral regional discussions with a long-term strategy of trying to bring those together, but I think that's our reality at this moment. I think that's our best opportunity, and I think we should seize it. Since you were kind enough to ask what software thinks about this, I will just say very briefly, I think we thought the rules that were in the trade-specific partnership were a good beginning. I think we thought they were a great beginning, and we were very pleased that the Obama administration was trying to begin to have a framework for data policy. But I think it was a beginning, and I think we have been, and probably very shortly we'll be in a place to talk about this publicly, thinking about, let's go beyond TPP. Putting aside the status of TPP at the moment, what does a broader digital trade agenda look like? And we have a number of ideas that we would put on top of where the baseline was set in TPP and try to move those forward.
Mm-hmm. And who would be the most receptive to that is an also interesting question we might bring out through our discussion. But Ricardo, would you comment?
Yeah, thank you. I wanted to react to a couple of things and also answer your question before. Where do we see the opportunities? So, the first thing on okay, the first thing to react to, I think, is this question of capabilities, the differences in capabilities that countries have, and then how they relate to the digital economy question. And I think that this is a very critical issue. Countries, as I think is Bill Drake that points out in one of his papers, that the digital economy really is taking place through this multi-layer. He talked about 5 layers of operation. And when we were talking about a world in which we were concerned with the top layer, the more visible one, the commercial transactions, then things were much easier probably for countries in terms of deciding what was their political economy, what were their interests, and so on. But as we go into an integration of the digital economy in the global economy, such that I don't think that there's anyone that participates in the global economy which is not a participant in the digital economy as well, then things get really much more complicated. So governments now are concerned about the possibilities that they have to participate in the digital economy, for instance, as developers of software or developers of internet solutions, or creating their own, they probably, some have, and actually they do, and speak like this, the illusion that they probably are harboring the next Google, right? And so they may be using industrial policy of the old type to fragment. That's the kind of fragmenting pressure that I think that needs pushback from the rules, and we're equipped not in an optimal manner. And so that's a discussion that, again, countries have to have in a very focused, concentrated manner. Now, we have there's some progress, as you mentioned before, on the TPP. It was the baseline. It's already been probably, there are some examples today that go beyond. They're happening, some of them in Latin America. There's a Chile-Uruguay agreement that has some very interesting features there. There's the Pacific Alliance discussions with Mercosur that also include some very interesting things in there. There's some people that are talking about digital regional markets, some countries that are getting together to talk about that, hopefully with a building blocks approach and not with a further fragmentation and segmentation approach. So there are all these opportunities, but again, what is more important right now is to try to understand how to respond from the trade perspective in ways that reassures consumers and that reassures governments on the concerns that they have. Otherwise, we're going to see more of the pushback on globalization that we're seeing, because it's just an open access question.
So, I just observed that since the WTO and the Uruguay round was concluded, it's just revealed that so many areas of economic regulation has externalities, has spillovers, that other countries feel they have a right to challenge and then look at and say, is this really what it says it is, or is it something else, or is it having effects even if it was a mixed motive that we have a right to be concerned about. And so when we talk about digital trade, obviously it's implicating these security and privacy issues. And security is an area where the world does not want to go if a jurisdiction says this is a matter of national security. The international trading system is not well set up to do anything but give deference to that self-definition. But there are many other areas where you look inside and you say, well, hold on. So I think Anupan has thought a lot about the balancing and the extent to which it is, quote, reasonable to pierce the veil of what another country self-defines.
Right. So the international trade law world is familiar with these efforts by countries to protect their consumers and their laws, even in the context of globalization. And Usman, hit the nail on the head, which is the point is simply to say it's perfectly right for a country to insist upon its laws, but it can insist on those laws without saying those laws can only be followed by domestic people. This is a framework that I think carries over into the digital world. Ricardo pointed out that, I'm sorry, I think it's Victoria also. Victoria said to Japan, stay strong in your negotiations with Europe. And that's because Europe has actually been reluctant in the digital space to enter into international agreements that kind of liberalize cross-border flows. But one of the fascinating things in this context is that Europe is at the same time liberalizing, insisting on digital liberalization within Europe. So it's recognized the fact that cross-border flows are necessary across the 28 member states in order to bind and promote trade. But it has been reluctant to offer similar kind of liberalization vis-a-vis the rest of the world. Europe seems on its way to kind of fragmenting into a kind of, now it's going to be fragmented further perhaps, but Europe has a kind of inconsistent global policy on this matter, which is recognizing that the need for cross-border flows, but only within Europe. Obviously Europe should be able to trust people outside Europe as well. And that's what trade law is about, ensuring that you can trust people outside that country as well.
Mm-hmm. And if I could just add to that, because Europe, there are many different views in Europe on this. The digital single market, I think, is a great opportunity, but it's a complicated and it's a long process. Inside of Europe, Vice President Ansip has been a big champion for data flows, and I think he will continue to be. But then, I said earlier that countries see their economic motivations in different ways, and the Ministry of Economy in France has said very openly and publicly that we see data localization as a way to compete against US companies, and we think this is in our best economic enterprise, and they've made no bones about that. They've been very clear about that, and that is why inside of Europe, although you have some member states like Sweden and Poland and the UK, although the UK is in a little bit of a special place at the moment, who are, I think, thinking about the global economy and thinking about cross-border data flows. You have other member states that are very openly saying for their particular domestic economy, what they feel like they need to do domestically, this is not how they want to treat the rest of the world. And the question is, I myself am a big believer in kind of the world will always eventually move to more globalization, more trade among nations, more openness among nations, and you are going to hit many, many bumps along that road, but I think that is the trajectory that the world has been on for thousands of years and will continue to be on that trajectory, and eventually those will be smoothed out. But there is a real debate happening inside of Europe right now, and then you're seeing it manifest itself in these various ways.
Mm-hmm. Well, I'd like to open this up for some questions from our audience, if anyone would like to get us started. Bill? I think there's a mic, Bill Drake. There's a mic behind you.
I want to go back to where Usman and Victoria started, which is the notion of trade as a leveler. One of the things that's so striking when I look at these experiences with, for example, data localization, and what was just being said about the French ministry, or even areas of cross-border data flow, or other forms of digital protectionism, the argument usually gets framed as, well, we're confronting an onslaught of this small number of large multinational tech firms from the United States who are going to come and sweep in and take over all these borders. And of course in France they're obsessed with GAFA. GAFA is the holy axis of evil, which is Google, Apple, Facebook, and Amazon. But the argument is not getting through very well that indeed these platforms that have been constructed and the other means that we've got now in the digital trade environment actually are opportunities for small and medium-sized enterprises and developing countries and entrepreneurs to really get a foot forward. The studies that you were referring to, Usman, with PayPal and so on, this kind of stuff doesn't get brought into the narrative. And so what I find over and over when I'm talking to, for example, a lot of internet people about internet trade issues and whether these can be dealt with in trade contexts, I get pushback because the perception remains that trade policy has all been captured by this small number of highly vested interests. So I guess my question is, how can we do more to try to build the narrative, the counter-narrative, that in fact trade is essential to inclusive growth, that you can show concrete examples of ways in which restrictive measures have impacted people negatively within countries, including data localization. There are users who lose in localization, right? It's not just the few companies that gain from getting a contract to have a server farm. There are users who lose. So both the negative impact of protection and the positive impact of openness has not been sold to people as part of the core narrative. And my question is, how can we go about doing that more effectively than we have today?
Thank you. Who'd like to jump in? Small and medium-sized business, I have to think of Alibaba starting that conversation. You've become really the embodiment of that image, which I think is a powerful one.
So we've joined a group that PayPal's a member of called the Global Innovation Forum. I think it's a U.S. based. I think it's got Google and PayPal and other companies. I think the intent of that, as I understand it, is to try to bring the stories of the SMEs out and to publicize them. So you're absolutely right. We haven't done a good job telling those stories. We're searching for those stories within the United States. Whether at Costco blew through their numbers on sales of nuts the first time they participated in our 11/11, our big Cyber Day. But we've got to someone's growing those nuts. So, but the big brands who sell into the Chinese market, we've got to work with them to find those small businesses who are supplying them. We're doing an SME export summit called Gateway 17 in Detroit on June 21st, bringing in a couple thousand small and medium-sized enterprises, trying to find those, and farmers, trying to find those products and small businesses who can have a possibility of succeeding on our platform. So we've got to tell those stories better. The night before, last Monday, the night before, Jack, we were in Geneva. Jack met with Secretary General Katui and separately with Director General Azevedo. He said, look, he's been involved in the SME, co-chair of the SME G20 subcommittee, and he said, look, we can't just have a G20. We can't just have a B20. He's been involved with the B20. We need a B200. We need 200 small businesses from around the world who are going to work with the large platforms and express carriers and others, and tell us what are the barriers to them doing business, and then we will help work with the solution, and then and have the head of the WTO and the World Bank and Christine Lagarde and the other international institutions, on this and help propose solutions for trade agreements, for domestic policies, for a digital trade, e-commerce around in the WTO. And so there's a lot of work that we need to do to tell those stories, because without telling those stories, it is viewed as just the big companies who are going to benefit, and that's there is some benefit for us, but again, we are a multiplier, we are an enabler, and we're out to empower small businesses.
So, Bill, I think it's a multi-pronged problem. but I'm somewhat optimistic. Multi-pronged in the sense of there's a perception issue here where trade is bad to a lot of people, so that already makes it not great to talk about this issue. Secondly, there was the large-scale truth that I talked about, that it was the big guys who were only able to participate in trade, so they're the ones that kind of have engaged generally. Thirdly, in all policymaking kind of contexts, there's an issue of small voices getting up to the policymaker, and when you're talking about an international context, it's even more challenging. So you've got these set of kind of existing barriers that I think are largely explanatory of why you see the dynamic that you do. The reason I'm cautiously optimistic is in classical sense, there were small businesses that were linked into the large kind of Exxon or whatever big business was involved in trade, but they weren't the kind of platform economics that we're talking about here. So the platform bringing those voices forward gives me some semblance of hope. And then secondly is the notion of, that we've said a few times on this panel, but I'll reiterate it again, having been at a kind of pure internet company in the sense at eBay, and now at a fintech company at PayPal, you know, financial services, transportation, energy, agriculture, manufacturing, all of these sectors are now becoming digital, as we've said many times. And so that's going to raise the awareness of this at forums where you're saying, oh, this is not an issue about GAFA, as you're saying, it's actually an issue about Siemens or a large Samsung, or, well, they're kind of a tech company, but, you know, Monsanto in the US, like that's their issue too. And so I think when that starts to happen is when you'll see some potential shifting in this regard.
Mm-hmm. Good. Well, I think, you know, this is a wonderful tasting of a huge, complex subject. I think we'll be breaking for lunch where you can help yourself, and then we'll be having an industry technologist give us some examples of areas of where interconnection is fundamentally changing, some industry examples that we'll talk to over lunch. But today's trade panel couldn't have been better, and I want to thank you so much for being with us.
Yeah.